goods here is basically, think about like you're buying gym equipment, you're buying clothing, you're buying appliances. And what was fascinating with this chart is that if you look at 2000 to 2020, basically the series were showing zero inflation on average. So this thing moves up and down, so it's less persistent. It tends to be more volatile than services. But for the better part of 20 years, we had zero inflation in this sector. And why is that? I mean, part of it is that there's a lot of technological progress in manufacturing. We had offshoring to lower cost countries in Southeast Asia in particular that kept prices down and made it easier to have like a low inflation rate in this sector. But of course, with the pandemic, we've seen a big change. So we started buying goods, we started buying gym equipment because we had nothing else to do. And so you saw goods price inflation really shooting up, which is very striking compared to the previous. I mean, we had 10% inflation in this sector compared to 0% over the previous 10 years. So it's really, really notable. But what's also encouraging is that we've seen a big, rapid decline now in this category, in goods price inflation. And this is really encouraging, in part because supply chains disruption that we've experienced over the past 2 years are really improving. So if you look at delivery time, this has come down to where we were before the pandemic. If you look at the number of boats that are waiting to be unloaded at the docks around ports in the US, it's really coming down. And so the supply side is improving. This is moderating, keeping prices down a little bit more than what we had seen.